Good morning. Thank you, Christian and Rosa, for putting on this lovely event. Really a lot of gratitude to you guys for doing it every year. And thanks for having me as a speaker. So I'm here at a value conference and I'm going to pitch Tesla. No, not really. I just put that there because I think it's quite interesting. So I run a fund in London, global fund, undervalued, under-researched and under-owned securities. Been going for about 10 years, global long only. There's my details. Okay, so Tesla, everybody knows 2018, the consensus was short this company. There's no ways they're going to be able to produce vehicles and scale up in a way that's profitable. And I think a lot of people who ran a short book most probably got burnt by shorting Tesla. And it became this phenomenon. And really, besides the share price phenomenon, actually, there's a real business under there, which is quite phenomenal. But now, the consensus in 2023 is no OEM can take on Tesla. They are the best in EVs, and simply they are too far ahead of everybody else. So I just wanted to present that there because the consensus has totally flipped. The script, as I say, the script has totally flipped. So I don't know if you can see because it's not so good, but there's many charts which show the market cap of Tesla versus the net income. You can see that huge red bar is Tesla's market cap, and then all the other colored bars are the market caps of all the other OEMs, car companies. And on the right side is basically the net income. You can see the net income of Tesla is fairly low, similar to all the other companies. So their market cap is very, very large compared to the rest of the sector. Why is it so large? That's why. Their EBIT margins, you can see their quarterly EBIT margins have just gone up and up and up and up and up and up. They make a lot of money. Why do they make a lot of money? Look at their operating leverage. Their OPEX versus their revenue is continually declining. Effectively, they don't need to spend any money doing sales and marketing. Does anybody have a Tesla here? Anyone has a Tesla? One Tesla driver. I thought there'd be more than that. Okay. So anyway, so they don't need to market their cars. People want to drive an electric car. So they have a first mover advantage in EVs. So my question is, can I, based on the script flipping, identify a car company with above average odds of making that EV transition? And can you do it knowing that they're already on the track to doing it and doing it well? And can you do it at a good price? So that's really what I want to do. And I just have a poll. I'm just curious, who has an EV? So we've got one Tesla owner. Who has an EV? Two people in the room? 3, 4 people in the room. So that's maybe like 5% of, how many is it? How many people are here? 70. Okay, so that's your percentage of how many people have an EV. Who's driven an EV? 2, 3, 4, 5, 6, 7 people? Okay, you guys need to drive an EV. I mean, it's quite an experience. I mean, it's an easy thing to do. Instant talk, right? So still, you can see that based on you guys who I assume have high incomes because you're in value investors, there's not a lot of people who have EVs yet. It's still quite low. I mean, look at the penetration. These are the numbers. In 2021, of all the cars on the road, you've got Norway, which is like 27% of cars are EVs, and some of the Nordic countries, but China's only 4%, Germany 4%, Europe 2%, America 1%, California 3%. Still, based on the numbers of this room of people who have EVs, it is still very, very low. So this is a chart for us, took from my friend Ole Solberg, who comes sometimes to this conference. And you can see the green bars is showing what the world thinks is going to happen in terms of EVs, pollution. You can say whatever reason you like. The world has kind of decided that this is the direction autos are going in. And frankly, as an EV driver, I can see why. I do enjoy my EV. So at the moment, it's maybe 10% of all sales are EVs from the auto companies. So not a lot, but growing more. So Volkswagen, it's about 7% of sales. They want to take it to about 15% of sales. They want to get into the teen percentage of sales versus ICE engines or combustion engines. So it's definitely a trend that I think is going to continue. So this is my criteria for finding an auto company, a car company that really can do this. I want a company that is already very big, so has sufficient large scale. Number two, I want a company with a win-win culture, strong management. Number three, I want a strong balance sheet because the capex that's required to transition to EVs is going to be substantial. Number four, I want existing profitability, a business that's profitable, so it's got that money to invest in R&D. Number five, I want to see that EV transition plan. I want to see that they've actually got that plan in place. And number six, I want to see that they're already actually doing well in EVs. And number seven, we're all value investors. I want a super cheap valuation. So I think I found a company that ticks all my 7 boxes and my criteria. And the ticker is not TSLA, but it's STLA. So a bit of a spell mistake, and that's why I had TSLA on my front. It's Stellantis. Now, if anyone knows Stellantis, the company, I'm sure you guys have heard of this company. It's changed many forms over the years. It's been around with Peugeot since 1896. He has some of the brands, Peugeot, Fiat, Jeep is one of their big brands. Jeep's a great brand in the US. Citroen, Opel, Vauxhall, Chrysler, Ram, Dodge, and Maserati. That's their, I guess, single luxury brand. So there are a lot of brands, kind of like a hodgepodge of brands, pretty average brands, not the best in the world, but that's what they have. So the first point, so in my 7 points, I want something with large scale. Many people don't really know the name Stellantis, but actually it's already the 3rd largest car company in the world by revenue. When you say, a lot of people don't recognize the name Stellantis, but it produces nearly 6 or 7 million cars, over 6 million cars, 500,000 vehicles a month. I mean, this is not a small company. It's very, very big. It has 300,000 staff. And as you can see, this is a chart that is just showing the market cap versus the production. So units is on the bottom scale and market caps on the top scale. You can see Tesla all the way up there, very, very, very highly valued based on its volume. And you can see sort of Toyota, sort of the largest in the world over there versus market cap. So if you draw like a standard line, it's not a sort of regression line, but you would expect a sloping line up if companies were valued based on their production. But obviously with companies like Ferrari who make like 10,000 or 15,000 vehicles and have a 50 billion market cap, obviously this chart is not so instructive. So to break into this large scale, to be a sufficient large scale, it's not an easy thing to do. So you have to give Tesla a lot of credit. I mean, if you have to build an auto production factory, it costs $2 billion, and then you have to amortize it over 4 years, 400 million or 500 million amortization. You want a lot of units to amortize the cost. So it's not so easy to break into that scale barrier, and give credit to Tesla, they did that. So the second point, I want a company with good win-win culture and strong management. And there's this term ecosystem control, which, lovely term, which this investor Dennis Hong has, which basically all your stakeholders, basically you want to appease and make sure you control all your stakeholders. And I think Stellantis has that. Why so? Investors, their share issuance hasn't changed. They haven't raised money like Tesla all the way through. They've actually now have a buyback. They're buying back stock as well. Plus they pay like a 10% dividend. So definitely for investors, there's a good relationship. For employees, I mean, they have huge labor forces, these car companies, and the unions are terribly important. And Stellantis has done a great job in terms of controlling its labor force. Not an easy thing to do as they transition to EVs, because obviously they're going to have to make a lot more people redundant. So they have these great policies in getting rid of staff, offering them early bonuses to be made redundant, and shrinking their team. So the quality of the team keeps on increasing as they get rid of people. I mean, it's a tough area because they do have a lot of employees. And then suppliers and partners are important because all these car companies have built up supply chains over the years which are based on ICE combustion engines, and now they have to basically change to EVs. So a lot of disruption is going to happen in the supplier side of things going forward. And then customers and user experiences. The results and net promoter scores coming out for a lot of their vehicles from Stellantis has actually been quite good. So to understand a little bit about this win-win culture, these companies nearly went bankrupt. Fiat nearly went bankrupt, merged with Chrysler. Peugeot nearly went bankrupt, merged with Peugeot Citroën, and they both basically had their own near-death experiences, and they used those near-death experiences to go and then buy other competitors and then turn them around. So they're very much a Darwinian company, survival of the fittest. And I think it's very, very good for Stellantis because they really have proven to be an industry survivor. So I don't know if you guys know Sergio Marchionne. He was the great Fiat leader. He did this legendary deck, Confessions of a Capital Junkie. He wasn't a car guy, but he was a businessman. And you can see, he basically said return on capital in the car business are average, pricing power is limited, R&D keeps on going up, unions are strong. Basically, it's a crap business. We need to make as much merger synergies as we can, consolidate, cut costs, consolidate, cut costs, consolidate, cut costs. And you can see that is evident. Fiat and Peugeot, when they merged, there's something like 7 billion euros of merger synergies, which has added 400 bips to its margin, which is quite amazing how they can basically cut this excess wastage from the company. So you can see there's a picture of John Alkine, which is Exor, the biggest shareholder in Stellantis, with the late Sergio Marchionne. And you can see the margins, the EBIT margins of Stellantis. I don't know if you can see, it's quite light there. Stellantis is in the orange, and the blue is VW. So you can see VW has been perpetually in a difficult space, and Stellantis has really achieved a lot better margins over the years than them. Even in America, they're basically achieving margins similar to the luxury brands like Porsche, for example. So this is the new CEO of Stellantis. I don't know if you guys know this guy, Carlos Tavares. I think it's very instructive that actually managing a car company, it's good to have a guy who races cars. He's a car enthusiast. He races cars, he fixes cars, he's a rally driver, he tests cars himself. This is a guy, he's well known because he used to work for Carlos Ghosn, and then he basically came out in the media and said, I want to run a car company. And then basically Carlos Ghosn said, sorry, you're out, kicked him out of Renault, and then he found his feet in Peugeot. I think he's actually very underrated. I think people will see he's a lot better than Sergio Marchionne in a lot of ways. So this is also another chart. BMW is in the blue in terms of their EBIT margins. And you can see Stellantis, Peugeot, and then Stellantis. And you can see where Tavares took over there in Peugeot in 2014. And you can see how their margins sort of increased. And they're making basically similar, more money than BMW. I think it's quite instructive as well, when the cycle turns, which it might be doing now in terms of autos, there's intangible pride of, working for an organization that is winning, doing well, because high margins really helps to protect you on the downside, when things inevitably turn, because these are very cyclical businesses. So there's an example of Peugeot, Citroën. I mean, this is back in 2007, 2008. They were really on their knees. And then they came back. Tavares turned the company around from about 2014. And how did he do that? Basically just cutting costs effectively. I mean, some of the things that he did, like their head office in Paris of Peugeot was center, huge, in the middle of the city. They basically, as soon as he got involved, he shut it down. He moved the facility outside of the center of town, just cutting costs, doing things that are necessary to make money. This is a chart of Opel. So they used their learnings to buy Opel Vauxhall, and Opel Vauxhall was owned by GM. For 20 years, they lost money. You can see those charts, losses, 20 years of losses. And then basically GM sells Opel to Stellantis, or Peugeot at the time. And you can see pretty much 2 years ahead of their plan, they already made it profitable. So definitely you can see, and I mean some small tidbits of information. When Carlos Tavares was flying to sign the deal to buy Opel, and Mary Barra from GM was flying there as well, she was sitting in first class and he was sitting in economy class. So you get an idea of the type of guy this is. He's not a very, look at me, I'm the CEO of a big car company. He just cuts costs. So number 3, this is a very important aspect for me in terms of my 7 points. They have an incredibly strong balance sheet. At the moment, they have 26 billion of net cash. If you look at all the auto companies, very important to look at them and their balance sheets and their lease books. They have huge lease books. They're basically banks wrapped into auto companies, a lot of them. And Stellantis doesn't actually have one of these captive auto finance companies. That's most probably a good thing and a bad thing for them. I think it's got advantages and disadvantages. But you've got a 50 billion market cap with 26 billion of excess cash. So they have no net debt. And I think this is very important going into this part of the cycle. You've got a lot of indebted competitors. You've got rising rates. You've got slowing markets. You've got a huge rise in EV capex. I was listening to the Volkswagen call recently, and not only are they super, super indebted, they plan to have capex of $180 billion over the next 5 years in EVs. I don't know where they're going to find all this funding from, but definitely I think it's going to benefit Stellantis having a very strong balance sheet. Now, they say this in all their materials, but I'm not sure if I believe it. They say that their sales can drop 50%, 50, before they lose money. And I find that I actually don't believe that. That's what they say, but it just seems a bit crazy to me that your sales can drop 50% before losing money. So if we do enter this negative cycle, I think they could be better than their competitors. So number 4, in my 7 points, do they have profitability to fund this capex, fund this EV capex? You can see there their return on invested capital, it's higher than all their competitors. Even at their minimum margin target of 10%, they still have a return on equity of 20%. So I think industry margins are currently strong because of the chip shortage, pricing power, and merger synergies. But they've definitely got profitability to fund this investment. So this is a slide from their materials, and you can see they have a 50% break-even point. So their sales can drop 50% before they lose money, and they're most probably 30% more efficient than their competitors in terms of their capex and R&D, because they're sharing all their research across 14 brands of automakers. They can consolidate things and share the costs, so it makes it cheaper for them. Okay, number 5. I'm getting to the 7. Don't worry, I'm nearly there. So 5, do they have a credible transition plan? Now, if you're going to grow in EVs, which the market is saying this is the future, you need to have a credible transition plan. This is quite a busy slide, but you can see they're already the number 1 EV producer in Europe in commercial vehicles, and they're number 2 in consumer vehicles. So they're already up there with the Teslas, the Volkswagens, and you can see they only have 23 models today that are EVs. But in the next 2 years, it's on this chart on the bottom there. In the next 2 years, they go to 47. So they're almost doubling their models of EVs, and they plan by 2030 to have 100% of their models EVs in Europe and 50% in the USA. Now, it's quite aggressive to say that by 2030, all their models will be EVs in Europe. And I think compared to a lot of their competitors, they've actually done really well in terms of their supply base. So in terms of, they've got 5 gigafactories, 200 gigawatts, joint venture with ACC in France, Germany, Italy, and also in Canada and America with this new Inflation Reduction Act. So they've got all their battery partners in play, and they're also going direct and buying some of the raw material companies as well. So they really are, I think, ahead of some of their competition in terms of EVs. So this is some of the example of their tangible evidence of scaling the EV transition. They have had limited disappointments in rolling out EVs, very different to GM, Ford, GM, Ford had battery issues, VW had software issues, Toyota has been way behind in EVs. So they're doing well. They had the Fiat 500e is the number 1 seller in Germany and Italy. The Peugeot 208e was number 1 in France. And I think a very underappreciated fact about Stellantis is people forget about the commercial vehicles, delivery drivers, plumbers, electricians. They're the number 1 EV producer in terms of sort of little light vehicles, vans and trucks. And that's similar to their US business, where the majority of their earnings actually comes from the US. So there's a bit about their batteries. They've got 5 gigafactories and potentially more. Plus they have partnerships with CATL and BYD in terms of their Chinese partnerships. But actually, they are one notable difference with Stellantis and the rest of the competition is they are very light in China. They don't actually have a lot of production in China, and they don't have any sales in China. Now, that could be seen as a good thing by some people, or could be seen as a negative thing. We'll see what happens. At the moment, there's a massive price war in China, and a lot of the companies, Volkswagen, BMW, Mercedes, all these companies have huge production and sales in China, and Stellantis is not so exposed there, although it will affect them because pricing for all cars will come down. So here's some pictures of their cars. That one's interesting. That one at the top, that's a Citroen Olli. The roof is made of cardboard. It's like a very cheap EV. It's like supposedly 10,000 euros. You know, they got the Fiats, the small Fiats, Opel, Peugeot 208. That's the Dodge Daytona. It's a Ram Charger. It's like a petrol car. And the one in the middle is very interesting. It's called the Jeep Avenger. So it's the first electric Jeep that's coming to Europe, I think shortly, the next few months. There's just one car of the year in Europe. I think this is going to be interesting because it's a nice price point, you know, 30,000 or so euros, and then the Ram truck as well. So out of interest, the top 10 selling cars in 2022, Stellantis has one model that's in the top 10. Anybody guess what that model is? Any guesses? Okay, I'll tell you. It's the Ram pickup truck. So you see that truck on the bottom left? That is their number one selling vehicle. This is all the selling vehicles in 2022. Toyota, Ford, Tesla, Chevrolet, Hyundai. They have Ram pickup, 550,000 vehicles. So not many people realize this, but Stellantis' number one vehicle is actually a pickup truck. They make most of their money in pickup trucks in the US. So I wanted to just play this video. I don't know if it can work. It's this was a Super Bowl ad. Let's see.
Excited about buying an electric vehicle, but worried that it could leave you unsatisfied? Then you could be one of many Americans concerned about premature electrification. Symptoms may include fearing you might not be able to last as long as you'd like.
There was plenty of charge before, and sometimes it goes away.
A lot of times.
I've been working a lot.
Being unsure if you'll have enough power to handle your payload.
I don't know if I got the power for this, baby.
I'm adventurous. I like to go all the way. I don't want to have to question if we're even going to make it.
Yeah.
It's a concern.
Lacking the confidence about getting and being able to keep a charge.
Having to stop every time we got really excited, that wouldn't work for me. Stop. Start. Stop. Start.
If PE, premature electrification, is something you're worried about, go to ramrev.com and find out if the Ram 1500 Rev, with options being designed to extend range in satisfying ways, is right for you.
Stop. Start. Stop. Start.
Are you excited about buying an electric vehicle, but worried that it could leave you?
So yeah, I just thought that ad was quite funny. Oh. Sorry. Okay, wait. So yeah, I thought that ad was quite funny, you know, premature electrification, you know, like selling a drug because everyone's worried about this electric. So it's interesting that, you know, Ram, that's really the biggest market, and the biggest model is this pickup truck. They make a lot of money in the US on this pickup truck. The average transaction price is $58,000 US. They make a lot of money. It's one of their highest margin vehicles. So people think of Stellantis as this European auto company, but actually the majority of their EBIT and returns comes from this. And this is their EV evolution concept, which they launched in January this year. And most probably production is going to be end of the year, early 2024. It's pretty amazing. I looked at this car. I mean, it's got some cool features. You know, you can pretty much, if you're a worker or you're a tradesman, you can put 2x4s all the way through. You know, it's got something called shadow mode, where if you're walking or you're planting something or you're doing something, the car follows you like a shadow mode. It's pretty amazing car. I'm not sure if this will be the production model, but it's already sold out, and it'll go up against like Tesla Cybertruck, for example. So I think this is going to be a key model for them. So lastly, okay, a lot about the business. What valuation are you buying Stellantis on? And we're all value investors. Stellantis is selling at about 3 times PE multiple, 10% dividend yield with a 25% payout ratio, with 50% of its market cap in cash. It's converted 70% of its earnings to free cash flow. So it's about a 25% free cash flow yield. and trades at basically half the EV EBITDA of its large US competitors, GM and Ford. So it's incredibly cheap. Now, why is it so cheap? I think most probably because it's autos, cycle. That's how I model the IRR of the company. And you got optionality as well. They could spin off Maserati, like they spun off Ferrari. Also they could get higher revenue streams from their software business. I think the upside downside is extremely favorable because you've got a very strong balance sheet and you get your money back from the dividends alone, plus the investment in EV capex. So why is it so cheap? I'd say European holdco structure, troubled brand histories. These are not really the best brands of autos. Many mergers. Dispersed ownership structure, listing in Europe, businesses in US globally, hugely cyclical sector, going into a recession, everyone thinks. So these companies have been over-earning, COVID bounce, prices, interest rates rising. I mean, you can name your reason. It's not exactly, when you say I'm buying an auto company, people don't think, oh, wow, that's great. This is going to be a great space for the next few years. People think, oh, really? Are you crazy? And this is why. I don't know if you guys have seen this graph. I really love this graph. It shows the consumer price changes of a lot of different things over the years. And you can see like the price of hospital services just straight up to the right. The price of college and tuition straight up to the right. The price of medical services straight up to the right. Always inflation. And then on the ones that are in blue straight down are like TVs, toys, computers, these sort of things. It's almost like the goods have gotten cheaper and the services have gotten more expensive. Or you could say that the industries where government has been involved, hospitals, medical, all these things, have prices always gone up, and the things that the government has got less involved in has gone down. But why I brought this chart up is because you can see new cars. It's the light blue line that goes pretty much flat line all the way across. And then in 2021, you just see the little spike, and that's the prices of cars. They've gone up for the first time in years. It's been basically flat line, and then they've gone up. So these companies have had pricing power. They've done well. The last few years' earnings have been very, very good. And this is why, new cars show persistent deflation in real terms. In other words, they always get cheaper in real terms, which it's quite a difficult industry to invest in a business where, you have deflation in real terms. And EVs are going to be margin dilutive for sure. So this is a nice chart just showing luxury vehicles versus mass market vehicles. I mean, Ferrari sells 10,000, 15,000 cars, and it has the same market cap as Stellantis. Ferrari came out of Stellantis. I mean, think about it. 15,000 cars it sells, same market cap, and Stellantis makes 500,000 per month, right? It's huge in terms of the difference. So Maserati is kind of in the middle, 20,000 cars. Hopefully they can get the models right there and do something with Maserati. Okay, getting to the end now. This is a chart I use when I look at my investments. The four factors are growth, profitability, risk, and value. And you can see the blue line is really all the auto companies. I bucket them into a group. And the green shaded line is Stellantis. So if the green shaded line is outside the blue shaded line on my four metrics, that's a good thing. So for example, growth, you can see that top quadrant on the left. Yes, Stellantis is growing quite well in terms of revenue growth. It's outside of its competitors, not so much in EPS growth. It's basically had its growth, right? But in profitability, it's much better than all its competitors. It has a much higher return on capital employed, return on equity, dividend yield. But the biggest one is value. You can see all that green shaded line on the bottom left quadrant. That's just showing you that the stock is very cheap in PE multiples, EV net sales multiple, EV EBITDA, price to cash flow multiples. And then also the bottom right is risk. So their balance sheet, their debt, you can see also it's basically outside that circle because it's got a great balance sheet. And this is quite small, you can't really see it, but these are their competitors. You can see the green is not really outside of the blue line. Maybe the top right is interesting. Ferrari, you can see how much money they make in terms of their profitability. But look, they totally, there's no green on the outside in terms of valuation. It's massively overvalued for what they produce. So this is just an example of some of their competitors. So that's when I bought the stock. 6 months I've owned the stock. That's my original thesis. And then second last slide, sorry. So this I found quite interesting. I had to do this work twice because I didn't really believe it, but I put the total return of Stellantis against Microsoft, Apple, Amazon. Microsoft is the purple, Apple is the green, Amazon is the blue, Stellantis is the orange, and the red on the bottom is Ferrari. And it's gone up 10 times in 10 years. It's actually outperformed big cap tech. And I was quite surprised by this. But it's basically they spun off Ferrari. Half of that return was the Ferrari. There was a 4 billion market cap in 2012. So it's done really, really well from a very low price. Whether it'll be the same going forward, I'm not sure. But I found that quite interesting that actually it's done better than big cap tech. And yeah, that's my last slide. So this is my final slide, courtesy of my wonderful colleagues at Compliance. In short, it says, he doesn't have a clue what he's talking about, but thank God he's done.
Any question?
Hi, thanks, Jonathan. Very good presentation. I was wondering, you mentioned it on the optionality slide briefly, just Maserati. I was wondering if you had done any work, much like Fiat Chrysler, in the 2010s, having Ferrari in there was arguably the big opportunity of owning it back then, in hindsight. So I was wondering if you had done some extra work on that Maserati brand. And then perhaps following up on that line of thought, I think one of the critics for Stellantis is that ingrained perception of lack of focus, or just like lack of portfolio rationalization, if you will. So on your IRR calculation and your assumptions, essentially, I was wondering if you were assuming some portfolio rationalization or just some multiple re-rating, or rather you were just assuming it could continue to be cheap and just deliver on that.
Yeah, so on your first good question, everybody thinks that they can do what they did with Ferrari, because Ferrari was so amazing how they spun it off and created $50 billion of value, which was hidden in Stellantis, right? So Ferrari was part of Stellantis, right? So everybody wants that now for Maserati. And it's possible, but if you look at the models that are coming out with Maserati, they really have not done well the last few years. They've got a new refreshed model, and hopefully when they get that right and people start buying the cars and things start looking well for them, there's possibility to spin it out. But it's definitely not my base case. As I put it in there, it's optionality. So, Stellantis isn't really, they say they've got 3 luxury brands, Maserati, DS, and what's the other one? They say Lancia. I mean, DS and Lancia, luxury, really? I mean, I don't even heard of these companies. So I don't really buy that they can do luxury, but maybe luxury is not so important. I mean, if you think about EVs, I was having this chat before to Ed, if this EV trend is going to happen, maybe it all becomes very commoditized and the brands don't matter as much as the technology, the range, even the mass market brands, they're all now getting the interior to be more luxury and more luxury and more luxury. So maybe it'll all sort of commoditize in some way. But I know that in the UK, people are brand snobs. Like, people will pay double to have a BMW. People will pay double to have a Mercedes. So I think different markets have different perceptions of brands. And I don't know how it will go long term in terms of the models that are coming. I mean, I know that the Chinese electric vehicles, there's so many of them and they're amazing. I mean, I would buy some of these Chinese vehicles because they're cheap, their range is good, the technology is good, but you can't really get them yet because there's this sort of protectionism, Chinese, et cetera, et cetera. So, it'll be interesting to see how it goes in terms of if they can spin off something, or if, having these mass market brands that are pretty average. I mean, Alfa Romeo has not done well over the years. Like Jeep is a great brand. Ram is a great brand in the US. So they've got some strong brands, but they also have, like, Fiat historically has not been a great brand, right? So I think, we'll see what happens in terms of this commoditized, if cars become more commoditized.
Yes, so Antti Bergholm, we know some of the background of this company, but not the recent developments. 2 questions, one related to Opel. So do you know for a fact what they did so differently than the previous owner to make the turnaround successful?
I think they really consolidated. I think they had a lot of plants and they consolidated everything. So they got rid of 4 production lines, 4. I mean, shut them down. right? So I think that's one thing, and that's hard. You know, you had a guy on the latest earnings call from Stellantis. You know, usually you hear analysts and investors, and then all of a sudden some guy gets on the earnings call. Yeah, I'm from the Belvedere plant in Chicago, and you guys are shutting down our Jeep plant, which has been operational for 58 years. You know, what do you say to that? And, you know, Carlos Tavares is, you know, listen, the world's decided to move to EVs. It's not our decision. You know, we're running a company here. You know, I'm sorry that we have to close down your production facility in Chicago, but this is the way of the world, mate, you know? And I think that's the real issue, that the real stuff with Stellantis is they are, you know, they cut costs, they close production plants when they're not needed. You know, they very, you know, Carlos Tavares is a cost killer. He just kills costs. And actually, if you look at Opel, Vauxhall, I mean, they lost money for a long time, and now they started making money. And interesting, you mentioned Opel. Out of all their brands, you know, Opel is the one that's selling the most electric vehicles versus ICE. I didn't even know that until recently. So they're doing really well in EVs.
Okay, and the second part was that in a way, now there seems to be a component shortage that's kind of maybe allowing temporary pricing power to the car companies, and that's why they might be over-earning with these excessive margins. But in a way, how long do you think that will last? Is that like a matter of 6 months or 2 years, or do you have any perspective on that when it must come down?
Yeah, I think they all say that the chip shortage is going to end in 2023. But I mean, do you believe that that's a chip shortage? Or do you think they just realize that they can produce less and make more money? I mean, you know, to me, it's an excuse. I mean, you know, they just produce less and make more money, increase prices, control the supply a little bit. Yeah, so I think that the component shortage, the costs of things are going down. Like lithium, you know, I don't know if anybody's looking at these things that go into batteries. Lithium just went on an absolute monster run, and it's down 50% in the last month or two, which is great, you know, for their margins, because in an EV, the biggest costs are the battery, and in the battery, the biggest cost has been lithium, to the point that when lithium, you know, 3-4 months back was at 70 or 80,000 or something, in every battery it's like $7,000 at spot price lithium. Now they're not paying those spot prices because they have long-term agreements with all the companies, but that's how much the cost of lithium was. So I think there's going to be a lot of supply coming into the space, and I think the costs are going to go down. So at the moment, no companies besides Tesla are producing EVs and making money. I mean, it's a real fact. These companies are losing money in EVs, right? And I think costs need to drop for them to make money. Now, the biggest question to me is what happens with all these Chinese companies? What happens with all the stuff in China? Can it come to Europe? Can it go to the US? Will Carlos Tavares and all these guys do some protectionism and say, listen, we couldn't compete with you, you know, you can't bring your cars and compete with us? And will they do the Chinese protectionism stuff, which I think Stellantis is in a good place to do that. But, you know, if there was normal, you know, free trade, I'd say that, you know, these Chinese companies would take a lot of the market, because a lot of the production now is all in China. And these guys are a lot better at producing EVs. BYD is fully integrated. In other words, it makes all its batteries, it makes all its components, doesn't rely on anybody else. Yeah. Hopefully that helped.
Really impressive stock. Just one question. Does this company have a big financier to finance purchases? I assume they will, right?
So they don't now. They're doing stuff now with like Credit Agricole and some of the leasing companies. So they're getting more active with their financing arms. But they usually do like partnerships. So they don't actually own it on their balance sheet. So they're taking some of their cash and they're basically injecting money into a financing joint venture and creating a captive leasing financing company now. So they're just starting.
They don't have a big portfolio of, let's say, commercial loans. Okay.
No, they don't. So this, for me, is this a good thing or a bad thing? I think it's both. I can't work it out if it's a good or bad thing. I think that it definitely constricts their competitors who have these huge financing captive leasing arms, but also it's very good to sell a car with finance. Most people finance vehicles. So I think this is an area for Stellantis to grow, but at this point they don't have that. That's why their balance sheet is quite strong.
I mean, with the current, financial crunch, like companies with General Motors, with these big financiers, that's a source of uncertainty. But if they don't have it at this point, probably it's better.
Well, that's what I think as well. To be honest, but it doesn't help their sales. Their sales, it doesn't help to not have a captive financing arm. But like, if you look at Volkswagen's balance sheet, everyone compares Volkswagen to Stellantis on the PE terms. But I would not do that under any circumstances. I would look at EV/EBITDA, and I'd look at the balance sheets, and I'd look at just the amount of debt that these companies have because they have these captive banks wrapped inside. So, I mean, Renault is an interesting one. A lot of value investors like Renault. If you look at the balance sheet of Renault, it's really ugly. I mean, they've got a lot of debt. And the cost of debt has risen. There's a bit of a crunch at the moment, what's going on in the world. So I wouldn't want to have a lot of debt now. That's my personal view. But anyway.
Thank you.
Yeah.
I think it's me now. Hi, over here. I was just wondering, with the cash, how much is kind of encumbered? Have they kind of earmarked that stuff? How much is kind of like free cash? Are they doing anything with it? What's the kind of the capital allocation side? Can they make us right?
Yeah, so I think they have like 25 or 26 billion of cash. It's all unencumbered, so effectively it's excess cash. As you questioned, they want to start a captive financing bank inside the company, so I think they'll inject some money into that. And then the capex required for EVs is basically why they need that cash. So they say that by 2025 or 2026, they want to spend $30 billion on EV capex. Now that sounds huge, but they can do that with their cash and their capital generation and still pay a 10% dividend yield and still buy back 3% of the stock, right? And still have excess cash. Now, Volkswagen, if you look at their balance sheet, they say want to spend 180 billion in the next 5 years on EV capex. I don't see the cash available there for them to do that. I really don't. Don't know how they're going to do that. But we'll see how that goes. So I think the cash is there, but it's needed because of the EV capex and the dividends and all that sort of stuff.
Last question, please. There was one guy there.
Very, very quick question. Very nice presentation. Did you check whether it's better to own Stellantis directly or via Exor?
Say again, sorry?
Did you check whether it is more convenient to own Stellantis directly or via Exor?
Yeah, Exor's cheap, great. John Elkann, yeah, it's most probably good value. I haven't looked at the discount lately, but you get other things. You get Ferrari, you get their other vehicles, and their other assets as well. I don't own Exor. But yeah, I think it's most probably a good play. John Elkann and Exor, they've proven to be phenomenal capital allocators. So, I looked at the holding company of Peugeot, that's still listed, but it's also similar to Exor. A bunch of other assets there. You don't really get pure Stellantis exposure. There's a lot of other things in there too, some things that I didn't like. So if I was choosing between the Peugeot holding company and Exor, I would choose between Exor, but I don't own Exor. Yeah.
Steve, quick one.
You can use your voice, yeah.
So you just gave a number of 130 billion for Volkswagen transition to EV, and these guys
180,
and these guys have 30 billion.
Correct.
I know Volkswagen is a bigger company, but it's not 5 times bigger.
Mm-hmm.
Why is the difference so large between those two numbers? Why is Stellantis saying that they only need 30 billion while these guys need 160?
It's a great question. And I would say it goes down to the economizing of Stellantis, and the fact that they're kind of already there. If you look at they've got 5 gigafactories, they've got 200 gigawatts of battery capacity. Like GM has huge issues with their battery supply chain, massive issues. Literally they going to LG cap in hand to try and sort their battery issues. They're way behind in batteries. A lot of these companies are behind in EVs, so they have been investing already. So I would assume that the number is low because they've already done a lot of these investments. But I'd also say it's lower in terms of the fact that they economize a lot. They've got only 4 platforms: small, medium, large, and frame. Basically, everything's going to be on 4 platforms for them. So I'd say it's most probably lower because they're more ahead and they spend less money. So I spoke to a guy from an Indian company. He said Stellantis destroyed one of my investments. It was an auto supplier. They just pushed them for price. That's actually not a good thing as well, because you don't want your suppliers to not serve you if you're pushing them for price. But I think they're very aggressive in terms of cost. Some of the internal expert stories of people working in the company you hear about how they push and cost and push and cost. I think that's just they're very aggressive in terms of cost. So I think that's the big difference. But Volkswagen, I mean, the issue I think these companies all have is there's like a massive price war in China, a lot of cars that are unsold, and I don't know what's going to happen. I mean, there's going to be discounting or something like that. So that's a separate issue. But I'd say that's the reason why, if I had to guess.